Welcome back to another videos. Join us for the latest news, insights, and updates on the Iraqi dinar. Don't forget to like, subscribe, and share your thoughts in the comments. Let's explore the world of the Iraqi dinar together. The Central Bank of Iraq, CBI, plays a crucial role in managing the monetary policy and currency of the country. At the heart of its responsibilities is the issuance and maintenance of stability and value of the Iraqi dinar, which serves as the official currency. The CBI faces the significant decision of whether to adopt a floating or pegged exchange rate for the dinar, particularly in relation to major currencies like the US dollar. Floating and pegging represent two distinct approaches to determining a currency's exchange rate. Floating entails allowing the exchange rate to be determined by market forces such as supply and demand. In contrast, pegging involves fixing the exchange rate to another currency, often done by the central bank. Presently, the CBI follows a managed float regime, where the dinar's exchange rate can fluctuate within a narrow range, but the CBI intervenes to prevent excessive volatility. Moreover, the CBI maintains a de facto peg to the US dollar, aligning the dinar's exchange rate closely with that of the dollar. Recent reports suggest a potential shift in this approach, indicating the government of Iraq and the CBI board of directors' intention to eventually float the dinar fully. This would mean that the dinar's exchange rate would be determined solely by market forces, without intervention or pegging by the CBI. The decision to float the dinar raises several questions regarding its implications for the Iraqi economy and its citizens. Understanding the benefits and risks associated with this transition is essential in evaluating the potential impact. One primary advantage of floating the dinar is the increased flexibility and independence it affords the CBI in conducting monetary policy. With a floating dinar, the CBI can adjust interest rates and money supply based on economic conditions and inflation targets, without the constraint of managing the exchange rate. This flexibility enables more effective responses to external shocks, such as changes in oil prices, trade dynamics, or capital flows, contributing to price stability and economic growth. Additionally, floating the dinar is expected to enhance the competitiveness and diversification of the Iraqi economy. A floating exchange rate would reflect the true value of the dinar relative to other currencies, based on economic fundamentals. This alignment can make Iraqi exports more competitive and affordable globally, fostering increased foreign investment and trade. It also creates incentives for domestic producers to improve productivity and efficiency, encouraging diversification beyond the dominant oil sector. However, the decision to float the dinar is not without its challenges and risks. One major concern is the exposure to increased volatility and uncertainty. In a floating exchange rate system, market sentiment and expectations influence the dinar's value, leading to fluctuations. These fluctuations pose risks and costs for Iraqi businesses and consumers, who must navigate price volatility in imports, exports, and the value of their savings and debts. Addressing these challenges may necessitate the development of hedging and risk management tools, such as forward contracts and options. Another risk involves the requirement for greater fiscal discipline and coordination from the Iraqi government. Floating the dinar diminishes the government's ability to use the exchange rate as a policy tool for economic influence. Instead, the government must rely more on fiscal policies, such as taxes and spending, to achieve economic and social objectives. This shift demands a sound and sustainable fiscal policy aligned with the CBI's monetary policy, avoiding excessive deficits or debts that could undermine the stability and credibility of the dinar. In conclusion, the decision to float the dinar is a complex and strategic one, necessitating careful planning and preparation by both the CBI and the government of Iraq. The advantages of increased flexibility and economic diversification must be weighed against the challenges of heightened volatility and the need for disciplined fiscal policies. The timing, pace of transition, and effective communication with the public and stakeholders are critical factors for ensuring a smooth and successful implementation of a floating exchange rate regime in Iraq. Thanks for watching Iraqi Dinar. Don't forget to subscribe, hit the bell icon, and share our videos. Your support keeps our channel going. Stay curious, and see you in the next one.